Have you ever thought about making money while you're asleep? That sounds like a dream, right? Today I'm going to be showing you how that's possible and how you can get started investing on the stock market for with less than like $5. By investing on, basically you could do investing on things such as an ETF or doing on stock picking. As you may imagine, this is a picture of the New York Exchange, which daily there's about $5.3 trillion in exchange and in hands every single day on a Monday to Friday. We can move on to the next. There is a need for a change because basically on the inflation in the year of 2022 has reached to about 8.2%. This means the prices are 1.72 times higher than they were on the past 22 years. And for example, the dollar has decreased a lot since then, and then basically what you could buy today, $100 will be basically what you could buy today with $100. It has only the value of about $58 compared to the previous years. Okay, so if that continues, as the inflation is just up the roof right now compared to any of the past years, because we had inflation higher than it's ever been on the past 40 years in the United States alone. If it continues to be that way, $100 today will be valued to about $108 next year. And here is, as you can see, some of the price changes over there. On the very first over there, the price of groceries has increased to about 42%. The international travel to about 37%. And things such as sports events or fun things like that, such as concerts or entertainment, has increased to about 37%. Yeah? Okay, we can move on to the next. And you may be thinking, why should I start investing? Because investing is a great way to build wealth and to start generating money for basically the kids that you might have one day. And then it's a great way for you to basically try to beat inflation, because if you leave just your money, as some people would say, like a grandma would say, like rotting under the mattress, is basically losing value year after year, and it's not really doing anything. Just saving enough money is not enough for you. You need to start investing for the future generations or the future of the family you might have one day, or just for yourself, so you have like a nice and wealthy retirement. There's many different ways you can start investing, such as like basically on the stock market. You can invest on precious metals such as actually gold, bonds. For those of you who don't know what a bond is basically when you you borrow a money to the US government, which is they basically have the machine that can print out money. So the chances of you not getting paid by that are very low, almost inexistent in today's world. So if you be borrowing a money, creating a government bond to the US, you basically will be like, okay, so I'll borrow you, let's say, a certain amount of money. There's all kinds of prices with the government, the US Treasury, and you could be like borrowing then $10,000 for, let's say, a 5% return within like 90 days or even 60 days, depending on how well you decide to go with that. The longer the bond you have with them, the more you get paid, basically. That's just the safest investment somebody can make out there, because they have the machine to print out the dollars. As you can see over here, you can come back. You can come back. Okay. So as you can see over there, it is on the beginning of the stock market in the US, on the crash in 1937, and then with the ups and downs of having 10% interest on your money, year after year or decade after decade, even though you might not make like a huge return such as in 1953 or in 1957, which it was higher than 10%, you still make some money. You just, in an average of 10%, some years a little bit more, some years a little bit less. Of course, every once in a while, fortune, there's a chance that you may have like a 2008, as you can see over here. It's just one of the very few years or the decades that you actually lost money, but you actually only lose money when you sell. You don't lose money when you're still holding on to it. You just have to focus on it for the long run. Okay, move on to the next. And then you may be asking, what is an ETF? That I hear about it all the time. And then it's basically an exchange traded fund where it's basically a group that follows the US index. So basically, instead of like buying each stock, let's say a Home Depot or an Apple, you buy each one of them individually, that will cost thousands of dollars to buy each share from each one of those companies. But buying an ETF, which is like basically a security, you have a little percentage of a lot of different companies. If they follow the S&P 500, with one share of that, that security, you'll be following in a group of the 5 largest companies in America. Versus a stock picking. For some people may be capable of, they have more knowledge to do that, and some may not. Usually, if I would be doing a stock picking, I'll be buying something that you use every single day, basically on your daily basis, such as a Home Depot or an Apple, which most people have an iPhone or at least one Apple device on their household, or a company such as Costco that our friend mentioned in her presentation the last class. Because even with the time of a recession or uncertainty, where the market may shake up a lot, if you just focus on the long run, you're very likely to get paid. And those are 10 of the biggest companies by the weight in the stock market right now. As you can see, we have Apple, Microsoft, which most people have at least one of those products, and Amazon, and Tesla, and some of the other companies. Those are some of them. We can move on to the next. And those are the size of the companies right now in the year of 2022. Apple, Chevron, Costco, and Home Depot. So basically, there's billions of dollars. Not like you're investing on a startup where you basically don't know where it's gonna be in 6 months from now or a year from now. Those are some of also the safest investment that somebody can make. We can move on to the next. As you can see over there, anybody who could have purchased one share of that company in November 10 in 2017 for about $42. It went up about $96.90 per share, which is an Apple, and he also pays 0.75 per share per dividends. For those of you who don't know what a dividend is basically when the company has the profit and it is a share of the earnings. As you being a shareholder, you get a little percentage of that profit. Apple pays quarterly, but there are a lot of companies out there who have like a fixed income who pay every single month. So that's money in your pocket. So you could either use the dividends to reinvest on the company or make a living off of it, as a lot of people do. Move on. As you can see, Costco over here in the same date, on November 10, 2017, traded for about $166.79. It went up $332, and now is the current price on the stock market is about $494. So we'll move on to the next one. So as you can see, Home Depot, the same day, it was traded for $164. It went up $114. And this is basically a 5-year chart for anybody who had bought on that date in 2017. You would have still made money by now, and plus the dividends that the Home Depot pays you quarterly, which are like $7.35 per share. We can move on to the next one. It's basically the same example. As you can see, it went up about $67. We can move on to the next one. So basically, this is a Vanguard index fund that follows the S&P 500, which all of the companies that I mentioned previously are involved on the S&P 500, and those are blue chip stocks, which basically are companies that have been around long enough and they have paid their dividends for at least more than 20 years without missing any quarter ever. So basically, the VOO, which is a Vanguard index fund, it has all of those companies on the package, and it also went up about $114. But that's the price that you pay, because you're so diversified and your money is split between 500 companies. You might not get as well as a return as you'll be doing on a stock picking, but that's just how I would advise basically anybody to get started if you don't have the knowledge to do a stock picking on yourself, or if you just don't have the time, or you don't want to be doing the effort to do so. We can move on to the next one. So hopefully now I have successfully opened your mind and gave you some examples of why you should be starting investing your money, and basically creating wealth for yourself, for your family, or the future of the kids you might have one day. So next time you ever go to a store or go to a bar or something, you overspend or you waste money on things that are not actually like a necessity, you could have an idea of how much further along that money can grow if you give it a chance to do so. And I think everybody should do that. And then, well, I'm going to be showing you a tutorial on how to get invested on the stock market with less than $5. So next time anybody can download an app such as a Robinhood or a Webull. There's a lot of brokerage accounts out there, which they are basically commission free, not how it was about 20 or 30 years ago, which basically you'll be having to call a stockbroker, and that person would charge you a certain amount of money monthly, or every single time that person will be doing the work for you to be buying you a share. Let's say the person will charge you a 1% a year or 2% a year. In today's world with technology, anybody can have access to it on their phone and basically be doing themselves, or at least have the curiosity of opening a brokerage account and take a look at some of the other companies out there. I advise for anybody who would like to have interest on it to start with companies that you know and you trust and you consume on your daily basis. For example, you might have a Nike shoes, or have you ever thought about buying a share of a Nike company, for example? It's one of the largest companies out there when it comes to the shoe industry. It's definitely a way to get started over there. Just buy things that you personally trust and you know about it, and you can click on that link. As you can see over there, I'm probably gonna have to be doing some pauses. Okay. Hold on. Where is it? So basically, this is my Robinhood account. This is some of the money that I currently only have invested on cryptocurrency, which is probably Bitcoin. And then everybody's on the loss right now, but if you just focus on the long run, it shouldn't matter too much. So as you can see, I opened my Robinhood account, and I was a little bit on the loss that day, which is fine because I'm focusing on the long run. I'm basically typing out the VOO, the Vanguard Exchange Fund, that I explained to you previously what it is. And here you can point it out the chart. It only shows about the daily chart, and it showed that on that day it went up about $1.89. I put it up, just the tick symbol as we call it. I put it on the buy. I clicked the amount of money I would like to purchase, which was only $4. So you just put it in there, the amount of money you would like to have to buy, and you click on review and you swipe up. As you can see, I was now a little bit more invested for the future, and about a share of that company, and I received the email on my account in case anything ever happens. I have a proof that I'm basically a shareholder of that company. And then you just keep doing that. And then, so for some people maybe think like, well, how much should I invest? How much are you comfortable with? As you can see, you can get started with as little as $4, but that money can go a long run. And just, don't try to, I wouldn't necessarily say not try to day trade, but that's something extremely hard to predict the market and how things are gonna go within the next 24 hours, or even doing a swing trade within the next 7 days. But I would just say, just buy the companies that you value, trust, and believe, and just focus on the long run. There you go.